imagine when you want to buy a phone and you go in the shop to buy the phone. First, you can pay that phone directly in a cash or bank, that is cash sales, because the cash is received immediately. Secondly, you can promise the supplier or creditor that you will pay later. That is a credit transaction. So we can ask ourselves that when a business made a credit transaction like that, where is recorded and how the business is how business maintain that record. That is where sales daybook start. Actually, sales daybook is a book of prime entry used in accounting to record credit sales made by a business. In a business, for example, if made a cash transaction, that can be appear in a book of primary entry called cash book. That is used to record cash receipt and cash payment. And when it's a purchase return, it can be in purchase and daybook. The journal is a book of primary entry used to record or credit sales made by a business. And it records the transaction in a chronological way. It means that transactions are in sequence according to time occurred. Yes. And at the end of the period, month, or any other posting period, total in sales daybook is totaled and it is transferred in sales account. And each customer, data, must have own balances. So there is a source document that we use to record in sales daybook. That means that if you have understood the logic of sales daybook, means that source document is what confirms that a credit sales occurred. And we know that source document is a proof that transaction has occurred. Before recording anything, we need the evidence that that thing have occurred. Sales daybook is based on sales invoice, that means showing that sales on credit have occurred, and when no source document means no accounting. Sales daybook is prepared by taking information from sales invoice for credit sales, while credit notes are used to record the returns or adjustments. Yes. Customer orders help support and confirm the sales before invoicing. Yes. I think this for source document is understandable because we need to have an evidence of transaction that have occurred. So we need the evidence. There is a step-by-step method that will help you to know how to record in sales daybook easily. First, if is a question or in a business, you must first identify credit sale. In all transaction you have, if is a question, you must firstly pick what transaction is for credit sales. Secondly, you calculate gross amount, and gross amount you take unit price times quantity. If, for example, is 50 phone and price per phone is 100,000, means the gross amount is 500,000. And thirdly, you deduct trade discount if any. Yes. Fourth step, you calculate VAT, and you know that VAT is a compulsory payment or compulsory tax imposed by the government for consumption of goods and services, and paid by the final consumer. Step 5, you record the net VAT and total. Yes. So for identifying a credit sale, first you check if sales is on credit. If yes, it is included in the sales daybook, and if not, if it is not credit sale, they don't include in sales daybook. Step 2, you calculate your gross amount. You multiply quantity by a unit price, as I said above. Step 3, you deduct trade discount if any. Yes, as you know, a discount reduces the price of the product and must be deducted. Yes. And step 4, you calculate VAT. As you know, in Rwanda, VAT rate is 18%. Then you take amount after deducting discount, then you multiply with rate of VAT and you get VAT amount. Then that VAT amount must be added to the price of product. Yes. Step 5, we record a sales, a credit sales in a sales daybook. Means you record the total amount in invoice. Yes. And you know that after preparing the sales daybook, we post in sales account and debtors account. And for debtors account, each customer is posted individually. As you know, in normal life, when I buy thing in your shop on credit, you cannot combine me with other buy on credit. Instead, we differentiate us, so one have his own credit and have an obligation to pay it. Step 2, you record in a general ledger where we transfer in sales account the total net sales and VAT output account. Yes. Let's continue on format of sales daybook. Format of sales daybook, we have date, we have account debited. Why account is debited? This data account is debited because what data owes to us is increasing, and as we know, data is asset, and asset, when it is increasing, it is debited. Yes. And we have invoice number, we have ledger page and amount. Date shows when the credit sales happened. For example, transaction may be occurred on 01 April 2025. Yes. Account debited or debtors account. This is the name of the customer who bought goods on our credit. Account debited or debtors account, it is a debtor's name. For example, John, Mary, Eric, something like that. Yes. Number 3, we have invoice number. Invoice number, it is a unique number for the sales invoice. Yes. This is help us in control and tracking. It acts as a proof of transaction. That invoice number is what shows that there is evidence that a credit sales have occurred. Ledger page refers to the page number in the ledger. Shows where transaction is posted later. I think it is understandable. Yes. Amount, the value of goods sold on credit, recorded as a net amount after trade discount, if any. Yes. When did the sales happen? When did the credit sales happen? This is a date. When? And who owes us money? Definitely it is data. And what is the proof? Proof is the invoice number. Where it is posted in the ledger, this is the ledger page. And how much is owed? It is amount. So example number 1. The following credit transaction took place in the farm of Akariza during the month of February 2022. On February 2, sold 50 sacks of cement at 10,000 Rwandan francs each on credit to Bahizi. On same date, 2 February, sold 70 sacks of cement at 10,500 Rwandan francs on credit to Horizon Limited. On February 3, sold 500 sacks of cement at 10,500 Rwandan francs on credit to Fair Construction Limited, raise 2% trade discount. On 10 February, sold 600 sacks of cement at 10,200 on credit to Real Construction Limited, receiving half of the amount in cash. For calculating this question, you must apply that step we have seen before if you are on the beginner level, but when you are on the intermediate level, it is not necessary. So first step, we must identify the credit transaction, or a credit sales in this transaction. When we observe it very well, on February 2, it is a credit sale. Yes, this is included. On February 2, it is also a credit sale. This is also included. On 3 February, it is also credit sale. Yes, on February 10, it is also a credit sale. But here there is a challenge. It is a credit sale, but half, because another half it is received in cash, means the remaining is a credit sale. Yes, the second step is to calculate a gross amount, is to take uh, uh, the quantity times unity price per unit. Yes, on the February 2, we take 50 times 10,000 to get gross amount. On 2 February, on the same date, we take 70 times 10,500 to get a gross amount. On February 3, we take 500 times 10,500 to get the gross amount. On February 10, we take 600 times 10,200 to get a gross amount. So the third step is to deduct a trade discount. When we observe it carefully, the transaction that have a discount is the transaction of here on February 3. So we will take a gross amount after multiplying 500 with 10,500. Then we multiply with 2%. And after multiplying with 2%, we will deduct that discount in the amount the customer must pay, because as you know, a discount is a deduction in a price. It may be cash discount or trade discount. Yes. And cash discount is a discount that seller gives to the buyer in order to encourage to pay early. Supplier can tell you that when I give you credit and you pay in 10 days, I give you a cash discount of 10%. Otherwise, if delay 10 days, no discount. So cash discount is a discount that is issued in order to encourage a repayment, while trade discount is a discount that the seller gives to the buyer in order to encourage to buy many quantity. Yes. So after deducting a discount, the step number 4 is to add the VAT amount. Yes, we must take for example, for this transaction in February 2, we must take 50 times 10,000 to get a gross amount. Then we multiply 18%, as we know is the rate of VAT in Rwanda. Then that amount we get, we must add it in on price of the product. Yes. So the answer, as you see, it's how I was explaining. Here is the question you must answer yourself. Kigali Distributor Limited is a VAT registered wholesaler dealing in electronic goods. The company trade discount equal to 10% on listed price, not recorded in books. And the VAT is 10% applied after trade discount. Yes, so that are the transactions that done by Kigali Distributor Limited in April 2026. On April 2, sold to Alpha Stores 20 TV at 300,000 each with this invoice number. On April, sold to Beta Traders 15 refrigerators at 500,000 each. Invoice number 102. On April 6, sold to Gamma Limited 5 radios at 40,000 each with that invoice. On April 8, Gamma Limited returned 5 defective radios from April 6 sales with that credit note. On April 10, sold to Delta Electronics 10 washing machine at 600,000 each with that invoice. On April 12, sold to Alpha Stores 5 refrigerators at 500,000 each with that invoice. On April 15, beta traders paid their account in full via bank transfer, eligible for cash discount. Means that beta traders paid within that 10 days that Kigali distributors allow cash discount. So, meaning that beta traders allowed that cash discount of 10%. On April 18, sold to Omega Shop 25 TVs at 300,000 each with that invoice. On April 20, Omega Shop returned the two TV damaged in transit, means that that TV damaged when delivering. On April 15, received a partial payment from Alpha Stores, no discount allowed, means that Alpha Stores paid in days more than 10 days. Required task is to prepare sales daybook preparation. So do this question yourself, but I'm going to show answer and calculation, but firstly, do it yourself and share in the comment section your answer.